Hey everyone, and welcome back to the Investing Talk podcast. We're going to be talking about CleanSpark today, a
Okay.
company making some pretty big waves in the Bitcoin mining world. Now, you might be thinking Bitcoin mining, that's so 2023, but CleanSpark is doing things a little differently. They're not just mining Bitcoin, they're also focusing on sustainability and developing some microgrid technology.
Interesting.
Yeah, and plus their stock has been on a wild ride recently, so this analysis is going to be pretty timely for all of you.
Well, you know what's really interesting about CleanSpark is how they're positioned. Like
Yeah.
right at the intersection of several major trends. You've got the growing demand for cryptocurrency, the push for renewable energy, and then the rise of decentralized energy solutions. CleanSpark is tapping into all of them.
Yeah, they're really hitting on some major themes for sure. But let's get down to the nitty-gritty here. CleanSpark had a 125% revenue increase in 2024, reaching $378.9 million.
Oh.
Yeah, that's got to be exciting for investors. But they also reported a net loss of $145.8 million. How do we make sense of that?
Well, that net loss might seem alarming at first glance, but it's important to understand the context. A large part of that loss comes from a non-cash impairment charge.
Okay.
What that means is they basically had to adjust the value of some of their assets on their books, but it doesn't necessarily reflect the health of their day-to-day operations.
Gotcha. So it's more of an accounting thing than actual money lost.
Exactly. A much better indicator of their core profitability is their adjusted EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. And their adjusted EBITDA was a massive $245.8 million, a huge jump from the previous year.
Wow. Okay, so we've got this, strong revenue growth, sort of a technical net loss, but a positive adjusted EBITDA. Now let's look at their stock performance. CleanSpark, ticker symbol CLSK, is currently trading at $9.21, down 3.15% today. It's been quite a roller coaster this past year, swinging between a high of $24.72 and a low of $6.41. What factors are contributing to this volatility?
Well, their recent decision to offer $550 million in convertible notes, that raised some concerns among investors. This move could potentially dilute the value of existing shares. Essentially, when a company issues more shares, the ownership stake of each existing share is reduced.
Right, dilution. That's definitely something investors pay close attention to. What else has contributed to these stock fluctuations?
Well, the general market anxiety surrounding cryptocurrency is definitely a factor. Bitcoin, along with other cryptocurrencies, is notorious for its price swings, and that uncertainty inevitably impacts companies like CleanSpark that operate within this space.
Makes sense, it's all connected. There was also some significant options trading activity back on December 13th. What was happening there?
Well, a high volume of options contracts were traded that day, indicating speculation about CleanSpark's future stock price. Some investors were making big bets on whether the stock would rise or fall.
So a bit of a gamble. Now looking ahead, what events or developments should investors be watching for?
The next big date to mark on your calendar is February 6th, 2025. That's when CleanSpark will release their next earnings report. And there's buzz that they might actually become profitable. If that happens, it could have a huge impact on their stock price.
Turning a profit would be a game changer. And we can't ignore the potential impact of recent political developments either. The election of Donald Trump and his potential crypto-friendly policies. That could significantly impact the industry.
Absolutely. Trump has hinted at implementing policies that could create a more favorable regulatory environment. For crypto companies like CleanSpark, this is something to keep a close eye on.
So we've got potential profitability on the horizon and possible favorable regulations. It seems like there's a lot of potential, but also a fair amount of risk. What are your thoughts on the bigger picture for CleanSpark and Bitcoin in general?
Well, it's important to remember that the Nasdaq had a strong year in 2024 with a 29% rise. And the general outlook for 2025 is optimistic. This is a positive sign for companies like CleanSpark that are operating in a growth-oriented market. However, we can't forget that cryptocurrency is inherently cyclical. There will be ups and downs, booms and busts. The key question is, what safeguards is CleanSpark putting in place to navigate these inevitable fluctuations?
That's the million-dollar question. They're riding the wave of Bitcoin, but can they weather the storms? Now, we know that CleanSpark isn't just a Bitcoin mining company. They're also investing heavily in microgrid technology and emphasizing operational efficiency. How do these factors play into their overall strategy?
These are some of CleanSpark's real strengths. Their investments in microgrids position them to take advantage of the growing demand for decentralized energy solutions. And by focusing on efficiency, they're continuously looking for ways to streamline their operations and reduce costs. These strategies give them a competitive edge, especially in a market that's becoming increasingly crowded.
It's like they're diversifying their bets within the crypto space, which is a smart move.
Yeah.
With a market cap of $2.69 billion, CleanSpark is already a significant player, but are they still undervalued? Analyst price targets for 2025 range from a low of $5.61 to a high of $11.13. Quite a spread. What should investors make of this?
Well, that wide range of price targets reflects the uncertainty and volatility surrounding CleanSpark and the crypto market as a whole. Analysts are trying to factor in many variables, like future Bitcoin prices, regulatory changes, and the company's own performance. It's a complex equation with no easy answers.
So it's a bit of a guessing game, but a high-stakes one at that. CleanSpark is clearly a company at a crossroads. They have strong revenue growth, ambitious plans, and a focus on innovation. But they're also facing market volatility, potential dilution concerns, and the unpredictable nature of cryptocurrency.
It's a classic high-risk, high-reward situation. The question for investors is whether CleanSpark can deliver on its promises and overcome the challenges ahead.
Yeah, that's what makes CleanSpark such a fascinating case study. It really embodies both the opportunities and the risks of investing in this emerging sector.
Yeah, it's like a microcosm of the entire crypto world, all wrapped up in one company. So given everything we've discussed, is CleanSpark a risky bet or a potential diamond in the rough?
Well, that's the million-dollar question, isn't it? And honestly, there's no simple answer. It depends on your personal risk tolerance, your investment goals, and your belief in the long-term potential of both CleanSpark and cryptocurrency in general.
It's a tough call, but that's what makes investing so intriguing, right? The challenge of weighing these risks and rewards and making those informed decisions. Absolutely. That's why it's crucial to do your own research, understand the company's fundamentals, and just stay informed about the broader market trends.
You know what I find really interesting about CleanSpark is their commitment to transparency. They've actually been giving these virtual tours of their mining facilities to investors.
That's a really smart move. It allows potential investors to see firsthand how they're managing their energy consumption and, implementing those sustainable practices we talked about.
Exactly. It builds trust and credibility, which is so important in an industry that can often feel opaque at times.
Transparency can be a powerful tool, especially in an industry that's often viewed with skepticism. It demonstrates a commitment to responsible mining practices, which is becoming increasingly important for environmentally conscious investors.
It's like they're saying, hey, we've got nothing to hide. Come see for yourself how we operate.
Right. And that approach could really pay off for them in the long run, especially as more investors prioritize ESG factors, environmental, social, and governance in their decision-making.
It's almost like they're trying to set a new standard for the industry.
It's certainly a differentiator. And it speaks to their long-term vision. They're not just focused on the quick profit. They're building a sustainable business model that aligns with the changing landscape of energy and technology.
So while CleanSpark might be a relatively new player in the Bitcoin mining space, they're definitely making a splash with their innovative approach and commitment to transparency.
It'll be interesting to see how they continue to evolve and adapt in the coming years. This is a company that's clearly pushing the boundaries of what's possible in the world of cryptocurrency and sustainable energy.
And speaking of pushing boundaries, let's talk about CleanSpark's microgrid technology. You mentioned earlier that it's one of their secret weapons. Can you elaborate on that? Why are microgrids such a big deal, especially in the context of Bitcoin mining?
Well, as we've discussed, Bitcoin mining requires a massive amount of energy. And traditionally, miners have relied on the traditional power grid, which can be expensive and unreliable. Plus, there are growing concerns about the environmental impact of using fossil fuels to power these operations.
Right. The carbon footprint of Bitcoin mining has been a major point of contention for critics.
Exactly. And that's where microgrids come in. A microgrid is basically a self-contained energy system that can operate independently of the main grid. CleanSpark is investing in microgrid technology that utilizes renewable energy sources like solar and wind power.
So they're creating their own mini power plants to fuel their mining operations.
In a sense, yes, but it's much more sophisticated than that. These microgrids are designed to be highly efficient and resilient. They can store excess energy generated from renewable sources and use it during periods of high demand or grid outages.
That's pretty impressive. It sounds like they're creating a more sustainable and cost-effective way to mine Bitcoin.
Precisely. By integrating microgrid technology, CleanSpark is addressing two major challenges facing the industry: the high cost of energy and the environmental impact of mining. This gives them a significant competitive advantage over other miners who are still reliant on traditional energy sources.
It's like they're killing two birds with one stone. They're reducing their operating costs while also positioning themselves as leaders in sustainable Bitcoin mining.
Exactly. And this approach could also open up new revenue streams for CleanSpark. They could potentially sell excess energy generated by their microgrids back to the main grid, or even provide energy services to local communities.
So they're not just thinking about mining Bitcoin. They're thinking about the bigger picture of energy production and distribution.
That's right. They're positioning themselves as a multifaceted energy company, not simply a Bitcoin mining operation.
It's a bold vision, and it's certainly one that investors are taking notice of. But there are still those concerns about dilution from the convertible notes offering. How significant of a risk is that for investors?
Well, dilution is always a potential concern when a company issues new shares. But in CleanSpark's case, I think the potential benefits of the convertible notes offering outweigh the risks.
Can you explain why you feel that way?
First of all, the $550 million raised from the offering will give CleanSpark significant capital to invest in its growth initiatives, including the expansion of its mining operations and the development of its microgrid technology. This infusion of capital could accelerate their growth trajectory and put them in an even stronger position in the market.
So it's about using that capital to fuel their expansion and innovation.
Exactly. And secondly, the conversion price of the notes is set at a premium to CleanSpark's current stock price. This means that the notes will only be converted into shares if the stock price rises significantly.
So in a way, it's a bet on the company's future success.
That's one way to look at it. If CleanSpark's stock price doesn't perform well, the notes will likely be redeemed for cash, minimizing the dilution impact. But if the company executes its plans and the stock price rises, the conversion of the notes could provide additional capital for further growth.
It's a calculated risk, but one that could pay off handsomely if CleanSpark delivers on its promises.
That's the key, isn't it? Execution is everything. And while there are certainly risks involved, CleanSpark has demonstrated a strong track record of innovation and a clear vision for the future.
They've shown a willingness to adapt and evolve, which is crucial in a fast-moving industry like cryptocurrency. Now let's shift gears and talk about the elephant in the room: the potential impact of Donald Trump's presidency on the crypto landscape. Some analysts believe his crypto-friendly policies could be a boon for the industry. Others are more cautious, pointing to his unpredictable nature and history of protectionist policies. What's your take on this?
It's certainly a complex situation with a lot of unknowns. On the one hand, Trump has expressed support for blockchain technology and even floated the idea of creating a national cryptocurrency. This suggests he might be open to fostering a favorable regulatory environment for the industry.
So there's potential for a more positive regulatory landscape.
Potentially, yes. But on the other hand, Trump is also known for his protectionist instincts and his willingness to use tariffs and other trade barriers to protect American industries. It's possible he could implement policies that restrict the flow of cryptocurrency across borders, or impose burdensome regulations on foreign crypto companies operating in the U.S.
There's a flip side to that coin as well.
Exactly. It's too early to say with certainty how Trump's presidency will impact the crypto industry. We'll have to wait and see how his policies evolve over time. But it's definitely a factor that investors need to be aware of and monitor closely.
It adds another layer of uncertainty to an already volatile market.
That's right. But uncertainty also creates opportunity. For investors who are willing to do their research and carefully assess the risks, there could be significant rewards to be had in the crypto space, regardless of which way the political winds blow.
That's a great point. Investing in emerging markets always requires a certain level of risk tolerance and a willingness to ride out the ups and downs. But for those who are willing to take the plunge, the potential rewards can be substantial. Now, we've covered a lot of ground today, from CleanSpark's financial performance and strategic initiatives to the broader market forces at play. But before we wrap up, I want to circle back to something you mentioned earlier: the cyclical nature of cryptocurrency. What advice would you give to investors who are considering dipping their toes into this market, knowing that there will inevitably be periods of boom and bust?
That's a crucial question. And my advice is this: don't invest more than you can afford to lose. Cryptocurrency is a highly speculative asset class, and its value can fluctuate wildly. It's not for the faint of heart.
So it's about understanding your risk tolerance and setting realistic expectations.
Absolutely. And it's also about diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, including more traditional ones like stocks and bonds.
It's about having a balanced portfolio that can weather the storms.
Exactly. And perhaps most importantly, do your research. Understand the underlying technology, the market dynamics, and the risks involved. Don't just jump in blindly because you're chasing the latest hype.
It's about being an informed investor, not an impulsive one.
Precisely. Knowledge is power, especially in the world of investing. By taking the time to educate yourself and develop a sound investment strategy, you can mitigate your risks and increase your chances of success in the long run.
That's great advice. And it's something that all investors, regardless of their experience level, should keep in mind. And we've talked a lot about the risks associated with investing in CleanSpark and the broader crypto market. But let's end on a more positive note. What excites you about the future of this industry? What are the potential game changers that could drive significant growth and innovation in the years to come?
There are so many exciting developments on the horizon. One area I'm particularly interested in is the growing convergence of blockchain technology with other emerging technologies like artificial intelligence and the Internet of Things.
Can you give us an example of how this convergence might play out?
Sure. Imagine a future where self-driving cars are powered by blockchain-based platforms that manage everything from ride-sharing transactions to vehicle maintenance records, or a world where supply chains are tracked and verified using blockchain technology, ensuring the authenticity and ethical sourcing of products.
It sounds like blockchain could become the underlying infrastructure for a whole range of industries and applications.
Exactly. And that's just the tip of the iceberg. We're just beginning to scratch the surface of what's possible with this technology. As adoption grows and innovation accelerates, we can expect to see even more transformative applications emerge in the years to come.
It's an exciting time to be following this space, even with all the inherent risks and uncertainties.
Absolutely. And for those who are willing to embrace the volatility and ride the waves of innovation, the potential rewards could be truly transformative.
Well, we've covered a lot of ground today, exploring CleanSpark's unique approach to Bitcoin mining, the potential impact of political and technological forces, and the broader landscape of the cryptocurrency market.
We've delved into the risks and the rewards, the challenges and the opportunities that await investors in this dynamic and evolving space.
Yeah, it has been a wild ride. And I really want to thank you for guiding us through this complex landscape. So for our listeners who are, eager to learn more about CleanSpark and perhaps consider adding it to their portfolios, what are some key takeaways they should keep in mind?
Here's what I would say. First, CleanSpark is not your typical Bitcoin mining company. They're thinking long-term, focusing on sustainability and integrating cutting-edge technologies like microgrids. This gives them a competitive edge and positions them well for a future where energy efficiency and environmental consciousness will be paramount.
Yeah, they're definitely playing the long game.
Second, CleanSpark is operating in a volatile market. Cryptocurrency is known for its dramatic price swings and regulatory uncertainty. This means CleanSpark's stock price can be unpredictable. It's crucial to understand your own risk tolerance before investing in this space.
It's not for the risk averse, that's for sure.
And finally, CleanSpark is a company with a lot of potential, but also a lot of unknowns. They're still relatively young, and their success hinges on their ability to execute their ambitious plans. Investors need to do their own due diligence, research the company thoroughly, and monitor their progress carefully.
So do your homework, weigh the risks and rewards, and make informed decisions. Now, for our listeners who are new to the Investing Talk podcast, what can they expect from our show?
Well, this podcast is all about taking complex financial topics and breaking them down into easily digestible insights. We want to empower you, the listener, to make informed investment decisions. We cover a wide range of topics, from individual stocks like CleanSpark to broader market trends and economic developments.
Yeah, we aim to provide you with the knowledge and tools you need to navigate the often confusing world of finance. And we always strive to make it engaging and informative.
Exactly. We believe that investing shouldn't be intimidating. Everyone should have access to the information and insights they need to grow their wealth and achieve their financial goals.
But remember, we're not financial advisors. The content of this podcast is for informational and educational purposes only. Always consult with a qualified professional before making any investment decisions.
That's right. We're here to guide you, but ultimately the decisions are yours to make.
All right, folks, that wraps up our look at CleanSpark, ticker symbol CLSK check. It's been a fascinating journey through the world of Bitcoin mining renewable energy and the potential of microgrid technology.
We've explored the company's financial performance, their innovative strategies, and the broader market forces that will shape their future.
We hope this episode has given you a better understanding of CleanSpark and its place in the ever-evolving landscape of cryptocurrency.
Remember, the best investment you can make is in your own knowledge. Keep learning, keep exploring, and stay engaged with the world of finance.
And if you enjoyed this episode, be sure to subscribe to the Investing Talk podcast. Leave a comment with your thoughts on CleanSpark and share it with your fellow investors. We'd love to hear from you.
Thanks for tuning in, and we'll catch you on the next episode of Investing Talk podcast.